Okay, recording this video, it's Monday morning here in Sydney, Australia. It's about 9:38 p.m. Chicago time on Sunday evening. Hope you had a good weekend. The markets have been open a few hours. We've got a little bit of a rally going. And I thought it'd be interesting to look at the big picture kind of macro charts. Just pull up a few of those to show you what's kind of going on, because this week, Thursday, we got the FOMC announcement, and everybody's on the edge of their seat whether they're going to raise rates or not raise rates. I'm not sure it matters kind of which way they go. The reaction to it is obviously going to be absolutely critical, but I think we have some turning points that are going to develop towards the end of the week and kind of play out this week into next week. So kind of have a look at those. First thing to do is just roll through the Emini charts from the low time frames to the medium and high time frames, and I'm using this multi-time frame chart just to show you what the trend direction is basically. So what I want to be showing you is kind of strength that's shown with red bars, and then weakness is shown with the white bars. And we got a little bit of a rally going. We kind of bottomed out on Friday and had a nice kind of closing rally that's kind of continued overnight. If I just switch to the ordinary view of this without the trending system, these yellow dotted lines show you the open of Friday's trade, the close of Friday's trade, and then this is the open on Sunday's trade here as we're kind of rallying up. And we had nice little exhaustion patterns into bullish divergence and flush and so on, and finally a little bullish divergence on the zero line here, setting up with a cyclical support, and then bang, that was where the uptrend really started. We had a nice little low risk entry point kind of coming up here with this little red dot, and then it's kind of continued, had a little bit of weakness here, a little bit of weakness here, but we've continued into this uptrend all the way up, and the overnight sessions were kind of breaking into the 60s. If you look at this on, that's a 500 tip bar chart, then which is kind of a day trading chart. Look at this on a 4500 tip bar chart to give you a bigger picture. Again, going to this view, these are the day sessions. So this would have been Friday's trade, Thursday's trade. It's all kind of compressed because that was a rollover. So it's a little bit messed up. I'm not kind of using the full volume kind of going through that. It's a continuous chart. So that would have been Thursday, then the Wednesday, then the Tuesday. Monday we had obviously Labor Day, so that was kind of off, and then the end of last week. So that's kind of what's going on. This was the activity on Friday though. So this activity is the Friday and the rally that's continued on. You can just see how we've got these exhaustion patterns, and bearish divergence comes in, market tops out, breaks into a downtrend, exhaustion pattern here, breaks into an uptrend, exhaustion, bearish divergence, then breaks into a downtrend, exhaustion, sell, bullish divergence. We hold after cyclical support, pull back to end of trend, and then bang, break into an uptrend here. So we've got some strength going on, not only on the day trading charts, but on the medium term charts. This will probably run until we get exhaustion buy, bearish divergence, this kind of a pattern. So I can see that strength kind of running into Wednesday, Thursday's trade. Wednesday will be kind of soft. Thursday is going to be when the real activity kind of happens. So equities markets for the next few days is kind of fairly strong. So and I'd be waiting for the exhaustion sells and bullish divergence patterns to kind of come in before a rollover in those equities markets. So shorter term, it's kind of strong. But longer term, and this is what I want to show you this. I showed you this a couple of days ago. This is this kind of big chart here where we've broken support. We've broken the lowest time frame support. This is a daily chart here. Lowest time frame support. Middle time frame, medium time frame support has been broken, and we're rallying back up. I'm waiting for that cyclical resistance to come in on the daily chart for another pulse down, pull back to end of trend. So that's what I think we're lining up for, that kind of equity play into some kind of resistance. And because FOMC is on Thursday, trading around then is going to be absolutely kind of critical. So, and I said the other day, this move down is different from these other moves down where we had cyclical support to save the move. With these, we've broken the cyclical supports in those medium time frames. I think we're going pullback into trend on this daily chart, and I think that'll kind of line up with FOMC type, before or after, kind of around then. So a little bit of strength kind of into that. So that's my view on what I'm looking at in my charts, at least in terms of the E-mini and equities. Bonds. Now, bonds are obviously kind of critical because FOMC is all about interest rates, and the most important bond is the 30-year bonds. This is showing, the weakness is not showing up in the short-term bonds. The short-term bonds are really strong, but any rate move will have the biggest impact on a long-term bond. So that's why the long-term bonds are showing more weakness. If we look at this pattern, the highs that we've had in the bond market have been lower highs here. When you look at the 5 and the 10, that's not the case. The 10 I think is about level. The 5, I think each of these kind of pivot points is actually a little bit higher. So they're stronger at the shorter dated the bond, but the long-term bonds are the weakest of the lot. And so this kind of topped out nicely with, this rally was going all of 2014 into 2015. We kind of topped out around the beginning of the year. And this thing was topped out nicely with a pullback to end of trend on the intermediate time frame there, which I mark with this dot light here, and then we fell into a downtrend, low risk entry point, which took us all the way back up, and that's where we had two resistance lines coming on the lowest and intermediate time frame, and we fell off from there. Now, into a pullback to end of trend, cyclical support kind of coming. A lot of kind of reasons to have some support there. What we're running out now is a pullback to end of trend move on the highest time frame. So we broke into this big trending move above resistance on the highest time frame, and now we're putting in pullback to end of trend on that highest time frame. If you look at this on with the same chart but showing better pro-am on these bars, you can see these spike blue professional bars. I always say these are incredibly important. We had the weakness come into here, and then we pushed past there for an exhaustion buy signal and bearish divergence. We've had this kind of come in over the last couple of weeks with this exhaustion pattern here and the weakness to come back. This is an amateur up bar at the moment on the daily chart. We're playing this move out, pullback to end of trend, coming back into the ties of this blue professional zone are kind of absolutely critical. So that's what I'm looking for on the 30-year bonds is some strength, just laying it. It's that final push up. Is this the final push up into a pullback to end of trend on the highest time frame? Here, we've had it on the intermediate time frame, pullback to end of trend. Here on this intermediate time frame, and now we're playing out the highest time frame, pullback to end of trend. And how this plays out in terms of weakness and so on is absolutely key. And I think it'll all be as a result of the FOMC, not just the announcement itself, but actually what happens after the announcements. Because oftentimes they use the announcements a little bit of fake, and it's the day after or the 2 days after the announcement where they use the volatility of the announcement to take positions, and then you can see the resulting trend after the FOMC. The two or 3 days kind of after the announcement is kind of the absolute key. So how this whole thing kind of plays out in terms of timing, we've still got some time to run in terms of pullback to end of trend, but it's an absolute kind of critical type thing. The other thing that's kind of playing on my mind here is Martin Armstrong, and he's saying the bull market and the bonds kind of coming to an end, and sovereign bonds going to be under pressure from 2015.75 kind of onwards, and this move is playing out to that pullback to end of trend. So that's kind of interesting for me. So that's 30-year bonds. Dollar index. Now, dollar index, again, similarly, we had this big old trend in the dollar index, which started in 2014, where we bottomed out the first half of the year, broke into this uptrend and played out. Here's the lowest time frame, pullback to end of trend. The intermediate time frame, pullback end of trend. And so we're going to play out support to resistance on the highest time frame at some point. Now we've had this big sell-off in the dollar index, but remember, it got caught. So I changed my tune, and I talked about this a couple of videos ago, 2 or 3 videos ago. Changed my tune on the dollar index after we had this kind of push up here, Rambo pattern kind of comes in, and we had some weakness in dollar index, and all of a sudden I was saying, okay, you got strength in the euro, British pound, dollar index seemed to be weakening. But then we had this whole series of exhaustion sell. This is when the equity sell-off kind of came, and the blue professional bars spiked down. Blue professional bars, they're really important. And the highs and lows of this kind of move are absolutely key. And what we're doing now is we're testing back into that blue professional bar zone here, from here to here. A break back above cyclical resistance here, which is out 96.5. Break back above there would take us into a continuation of this uptrend move in the dollar index. So that is going to be absolutely critical. Coming in, testing back down into these kind of blue professional bars that were exhaustion sell, not exhaustion sells, but the big blue professional ranging bar is where the professionals are kind of using the volatility on those days to kind of take positions, and so we're testing back into that zone, and a break back up above the cyclical support would take us into another trending move on the way up. So that's very interesting for me, and that's what I'll be looking at. Again, FOMC, is that going to play into this story somehow over the next week. Hopefully you can't hear this. There's a leaf blower outside my window kind of going on, so hope that's not coming out on the soundtrack here. So dollar index, will we get that continued strength in dollar index as we kind of push into a test and then break back out? The reverse is what we see on the euro pattern here, and so we had this strength in the euro. Again, I'd changed my tune on the dollar index and euro a couple of weeks ago, because it's the flip side of the dollar index chart. We'd had all these pullback to end of trend, exhaustion, sell, bullish divergence, flush patterns down here. Then on the intermediate time frame we go pullback, end of trend, and then we break into a nice little uptrending move here, red bars strength here. And if you look at this with better pro-am, you can see it's been a push back up into there. It's the flip side of that dollar index chart, and we've kind of played off there. So the professionals seemingly have used that strength to get short in that position. We're now moving back in to test that whole zone kind of here. And so a break then back below cyclical support would take us into a trending move on the way down. The number there is about 111.5 as kind of a key support area. If that gets broken, then this downtrend will continue and will play out this whole thing in terms of a pullback to end of trend on the highest time frame here as we kind of roll into that. So dollar index and euro there. I suppose I see some divergence happening in terms of the euro and the British pound compared to the commodity indices. This year the commodity indices have got absolutely smoked. I'm going to show you the Canadian dollar here, but the Aussie dollar is kind of exactly the same type patterns kind of going on here. While we've had strength in the euro and the British pound, the commodity currencies like the Canadian dollar and the Aussie dollar have just been absolutely smoked. I don't have a chart of the Brazilian real, but I imagine it's kind of a similar type pattern. So Canadian dollar, you just see downtrend continued down as we topped out here with exhaustion buy kind of patterns, then a flush pattern here, and then as soon as we broke below this kind of critical support level here into a downtrend, continued pullback to end of trend, we just kept on busting through supports. And that's what the trending system is based on. It's busting through supports and resistance. That's determining, I've said this, that's how you know that you're in strength or weakness, is when we bounce normally off support and resistance, but it's when we break through those are the signals to really matter. And some of them we can discount. A little bit of strength here on the lowest time frame can be discounted because the trend in the higher time frames is still on the way down, so we kind of can paint all of these bars white all on the way down. But what's interesting on the commodity charts here is pullback, end of trend, exhaustion, sell, bullish divergence kind of come in here. I know we're still kind of breaking down, we could still have continued weakness, but we have some blue professional bars picking it up on down bars here, which is kind of a little bit, it's way too early to call. I mean, before we get any change in trend in the commodity charts, we've got to see resistance lines kind of broken to the upside, and it's way too early. They're still breaking down through support lines here. But it's interesting. I mean, I'm here in Australia, and I think if you bought the ETF on the Australian market, it's paying about 6.5% dividend yield at the moment. I mean, it's damn good value. Tempting to kind of come in with a long-term position on a commodity market like Australia. And in the fullness of time, if the Canadian dollar, if the Aussie dollar starts to rally in the next year or so, we find a bottom and it kind of pushes up, you'll have the double whammy. You'll have three things going on for you. You'll have a nice dividend yield that you've bought. You'll have a turnaround in the index in that country, and then you'll get the currency kind of going your way. So the timing's not right yet, but this is worth kind of keeping an eye on, and a nice dividend yield like that is kind of worth playing out. 6 months ago, that dividend yield was in the Russian stock market, and the Russian market's starting to try and find that bottom again. You get the triple whammy. You'd get a dividend yield, a currency play, and an index play. So, but it's too early to say. Kind of here that we're changing trends. It's just interesting that we played off that weakness all the way down, and then the weakness in the commodity charts. Just show you the crude oil chart here, and again, this is $100 was absolutely key. as soon as we'd done our exhaustion buy, bearish divergence, come in and flush, 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 resistance comes in, and then bang, wham, just all the way down. I mean, we've had no areas of strength in the crude chart here, and I totally missed this move, and it kind of it sickens me that I didn't take any of this. I was anyway, so resistance, break, 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 a little bit of strength here. We're breaking into pullback to end of trend. We kind of overshot it here. We've overshot it, but you know, these blue professional bars are going the wrong way for crude oil. They should have been, that move, you know, we had this huge amount of strength in crude. It was almost like a little bit of a short covering rally. Didn't come with exhaustion patterns, but those blue professional bars should have been picking up the lows. So I'm sorry, that looks like that's going to fail. We're going to go back down and kind of keep on kind of testing into crude. So the downtrend in crude is still kind of there. And lastly, gold and silver. I'll show you the silver chart because it's kind of the prettiest. But they both have this same problem, this downtrend that we've had in gold and silver. You know, downtrend. We're weakness here, fraction, a little bit of strength, and then we break again into another downtrend. I know we're trying to find supports, and pull back to end trend supports. Trying to stop it here. But here's the problem: no exhaustion sell. So all these exhaustion patterns are all happening on the highs. They're all exhaustion buys, bearish divergence, flush, exhaustion buy. No exhaustion patterns on the downside. And let me flip this to this view of the market with better momentum and the pro-am bars on here. There's the exhaustion sell. This is getting the move going. You know, it did stop it there kind of temporarily, but all of these patterns that we've had subsequently, exhaustion buys, flush patterns, and so on, there's nothing on the downside. We haven't had that absolute flushing out, and the gold chart is exactly the same. We haven't had that absolute capitulation of gold and silver, and so until we have that, I find it difficult to see how we're going to rally very much here. We'll see. I mean, it could be wrong, but that's what I would be looking for on these charts, is those exhaustion patterns, real volume exhaustion patterns. They've happened on the flip side, and been used to kind of take the market down each time rather than the reverse. So there we go, a little bit of a kind of rip through those charts. FOMC Thursday this week. Everybody's going to be gearing up and gearing up and gearing up, and I must admit, kind of reading my feeds, the news stories, Sunday, Monday, what a mess we're in. Just you look at everywhere around the world, it's just an absolute mess. This kind of immigrant story in Europe is just relentless. Then we got, you know, I called him an angry aging Marxist. This is the Jeremy Corbyn, just been voted head of the Labour, the opposition party in the UK, and he's a future prime minister in the UK. Just you know, who cares what your politics are? It's going to be fun. You know, whatever happens, he's a firebrand. So it's going to be interesting politics kind of going on there. And then we got, you know, Trump, who's just speaking his mind. All the Hillary emails, kind of, that will not stop that story. Where that goes, who knows? Just everything that's kind of, you know, the whole of the Middle East is totally destabilized. And I'm sorry, it's from, you know, American, first of all, kind of wars, but also, you know, all the Benghazi stuff's kind of coming out. It's like, you know, the Americans were have been so active in just trying to fund factions and arm factions, and oh my God, what an absolute mess. You know, I know you're trying to do it for the right reasons. You want kind of good guys in charge, but you know, for heaven's sakes, the thing is just totally messed up. But anyway, so all I see looking around is just what a mess. But anyway, it's interesting trading, and we've got FOMC on Thursday, so enjoy it. It will be fun. So I hope your trading is going well.